Hi everyone, welcome back to Saheb Academy. Today in this third video of financial statements of sole proprietorship with adjustments, in this chapter we are going to solve our second problem. Yes, and why we are taking this question is because here we have got bad debts, further bad debts, old provision for doubtful debts, new provision for doubtful debts, and new provision for discount on debtors. Okay, so here we will be able to make use of our shortcut, right? We'll see that. And then here we also have got an hidden adjustment. All right, so because of that I have taken this question. So let's start. Let's first analyze the question. Okay, let's begin. Now see here, from the following balances taken from the books of Reddy and Sons and adjustments, prepare trading and profit and loss account for the year ending 31st March 2025 and balance sheet as at that date. Okay, here we have been given lots of balances. Now here it's not segregated properly. Okay, it's all mixed up over here. And then here we have got adjustments, right? How many adjustments do we have? 6 adjustments, but you know it's more actually, because in the second adjustment we have 3 things, right? Like that. So understand, first what we are going to do is we are going to analyze the question and see where each of these things will go. So let's just first start with the opening stock. Where it will go, tell me. Trading account. Purchases, trading account. Sales, trading account. Wages, trading account. Power and electricity, trading account, right? Salaries, P&L. Bad debts, P&L. You all know this. Income tax, balance sheet, right? It's like drawings. We have to subtract from capital. Yes. Loan to Param at 10% per annum. Now tell me, what is this? Have we taken a loan? No. Loan to Param. We have given the loan. Do you understand? The wordings you have to read properly. Okay. And here they have also given a date on which we have given a loan. All right. So what is this? This is like an investment. It will go in balance sheet. Okay. It is an asset. Is that clear? We have given loan of 5,000. Then the very next line, see, interest on loan to Param. Now what is this? This is the interest income we have got from Param. Yeah, we have given a loan, so we will earn interest, isn't it? So this is an income which will go in P&L. Then we have commission received. Commission received, you all know, it's an income which will go in P&L. Cash in hand, balance sheet. Yeah, rent is an expense which will go in P&L. Rent outstanding. What? Rent outstanding? What is this? How is it appearing in trial balance? Now understand, our junior accountant is smart. Yeah, he has done the accounting of outstanding rent and he has taken it in the trial balance, right? So whatever comes in trial balance, you all know it will only go in one place. Yes. So what is this? Rent outstanding is a liability. Yeah, it's a current liability. It will go in balance sheet. Really simple. No adjustment, nothing. Is that clear? Fine. So it's a liability. Okay. Then next we have provision for doubtful debts. You see, what is this? Provision for doubtful debts. This is old PDD. Already provision is there in the business. Okay. So where it will go? It will go in P&L. Fine. All right. Then we have furniture. Now furniture, see, 5,000, but in the bracket they are saying purchased on 1st October 2024 for 1,000 rupees. What does that mean? It means in the current year we have purchased a piece of furniture for 1,000. Is it clear? So in this 5,000 there is a piece of furniture which cost us 1,000 and we purchased it on this date, 1st October 2024. So what does that mean? It means we have to charge the depreciation from the purchase date till the year end, isn't it? Yeah, October, November, December, January, February, March. 6 month depreciation we have to charge on this. What about the remaining 4,000? We spoke about 1,000. What about the remaining 4,000? That is there from the beginning of the year. Complete 12 months depreciation we can charge on that normally. Is it clear? So if you see in the adjustment right now only, see here they have said 5th adjustment, depreciate furniture by 10% per annum. So let's just calculate. Really simple. 1,000 first we'll calculate. That is 10%. So that's equal to 100. 100 into 6 by 12. 6 months depreciation, no, that is equal to 50 rupees. Then the remaining for the 4,000, 12 month depreciation we have to charge. So 4,000 into 10%, yeah, that is equal to how much? 400. Yeah, complete year depreciation we are charging. So 400 plus 50, that is 450. So 450, what will happen to this? You all know in P&L we have to charge the depreciation, and in balance sheet we have to show the reduction in the asset, isn't it? You have to reduce the asset, the furniture value. Is that clear? That is what we will do regarding furniture. Then what? Then see, we have bills receivable. Simple, balance sheet. Yeah, yes, it's an asset. Bills payable, balance sheet. Machinery, balance sheet. Okay, now is there any depreciation rate given for machinery? No, no depreciation rate, nothing. They are not saying anything about that. So what does that mean? It means most probably we have purchased this machine at the end of the year. So that means no depreciation you have to charge, isn't it? No time has been passed. Is that clear? So directly just take it in the balance sheet. Next we have debtors. Now see, debtors, what will happen on debtors? You all know it will go in balance sheet, this 28,000, but there will be lots of adjustment on this. Yeah, if you see the second adjustment, see here we have got further bad debts, write off further 500 as bad debt. Yes, also maintain a provision for doubtful debts at 5% on debtors. So we have got FBD, further bad debts, and new PDD also they are saying to maintain. What? New PDD. You all know this. Yeah, new PDD they are saying how much? They are saying 5%. All right. So this will impact, no? So on debtors, further bad debts will impact first, then provision for doubtful debts. Then there is one more provision they're asking to make, that is provision for discount, which we call as here new PD, provision for discount. Yeah, 2% they are saying. So that is also an adjustment on this. Is that clear? Do you understand? On furniture also we have got an adjustment of depreciation. Okay, yes. So how that adjustment will happen of data, shall we see that right now? See, it's really simple. Let's just see the adjustment right now only. See what we are going to do. First we are going to do rough balance sheet calculation. Debtors is 28,000. Yes, first always further bad debts will be subtracted, which is 500, not the trial balance one, the adjustment one. Okay, subtract that. So you will get 27,500. From this you will subtract what? You will subtract always new PDD, provision for doubtful debts, which is at 5% they said, right? So if you calculate that, see here 27,500 into 0.05, that is equal to 1375. 1375 is the new provision. Yeah, the adjustment one. So if you subtract from 27,500, you get what? 26,125. So 26,125. On this you will calculate what? New PD. PD means provision for discount. How much? 2% they said, right? So 26,125 into 0.02, that is equal to 522.5. Can we round it off? Yes, of course. So let's just make it 523. You can round it back also. Okay, that's fine. So if you subtract 26,125 minus 523, that is equal to 25,602. Now 25,602 will be written outside in the main column of the balance sheet. Is that clear? So this is the balance sheet calculation. Exactly like this you will do in balance sheet. Fine. Why did we do this in working note right now, like in rough? Because we want to know how much will hit profit and loss. Yeah, how much will hit profit and loss. So how that will happen, let me just show you. We are making use of a shortcut. You all know, right? Previously what used to happen? Previously separately we used to take. Separately this used to go to P&L, this used to go to P&L, isn't it? This used to go to P&L. Now this will go to P&L, the provision for discount. This is like that only, but these two will not go directly in P&L. No, no. First this will go to old provision. First this will go to old provision, I mean the provision account, right? Then from there one hit will go to P&L. So how that will happen? It's really simple. We will make use of provision shortcut to calculate how much will hit profit and loss. Yeah, so how we do that? First we take new PDD. Yes, from that we subtract, new PDD is 1375. From that we subtract bad debts, we subtract further bad debts. Yeah, bad debts is 500, which is there in trial balance. Yeah, and then further bad debts is also 500, which is there in adjustment. And then old, sorry, we add, okay, we add first and then we subtract old provision. These two we have to add and then old provision we have to subtract. Yeah, that's the shortcut. So old provision is how much? Old provision in trial balance is given 1000. So 1000 you will subtract. So 1375 plus 500 plus 500 minus old provision 1000, that is equal to 1375. Is it clear? So 1375 will be debit in P&L. How it will happen? Let me just show you. If this is the P&L, then you will write 2 PDD, 2 provision for doubtful debts, 1375. What is the logic of this? The logic is really simple. I explained you. The shortcut is not just like that only. No, it's based on the ledger account. All the bad debts have come over here, old provision has come over here, new provision has come over here. Then we find out this balancing figure hits profit and loss. Is that clear? We got a positive figure now, so it's a debit in P&L. If we would have got minus 1375, then what would have happened? Then see, in ledger account, here it would have come to, what do you say, to P&L. In P&L, it would have come by PDD. Is that clear? By PDD, like that. Okay, you understood this? Fine. So you are done with the debtors adjustment completely. Easily you can do while doing the solution. All right. So debtors over, creditors, balance sheet, liability, capital, balance sheet. Simple. You understood, right? Yes. Now what? Now see, come to the adjustment. We are done with all the identification. If we come to the adjustment, see here, first adjustment, closing stock at cost was 35 and the market value is 30,000. You all know we have to select the lower one. So this we have to select. First it will go in trading account and then it will go in balance sheet as a current asset. You all know regarding this. Yes? Yeah. And then second and third adjustment over. We just saw, yeah, bad debt, further bad debt, and then the provision, everything is finished. Fourth one, commission received includes 3,000 received in advance. See, here we have commission received, 4,500. On this we have got an adjustment. What is the adjustment? In this 4,500, you have to understand, they are saying 3,000 is received in advance. For this 3,000 we have not done any work. For this 3,000 we have not done any work. So what we have to do, this is, you know, what is this? This is advance. Yeah, this is advance. So we have to see, we have to reduce the income and we have to recognize in balance sheet a liability. What is the logic? The logic is really simple. We have not done the work. Yeah, we have not done the work. We have not provided the service. We have just got 3,000 in our pocket from the customer. So if the customer comes and says, I don't want you to do my work, please give me my money back, then we would have to refund. No. So it's a liability. Is that clear? It's not an income. We have to reduce the income. We have to reduce 3,000 and we have to recognize a liability in balance sheet. That's the logic. Fine. Okay. So commission received, you understood. Next we have furniture depreciation. We have already done that. Then we have salaries. See, salaries for the month of March 2025 were outstanding. What does that mean? It means the salaries were not paid of the last month. Of the last 1 month, salaries were not paid. So what does that mean? Are we not going to record in our books? We have to record in our books, right? We have to record the expense, but the junior accountant has not done that, right? Now as a senior accountant, we have to record. So how that will happen? It's really simple. See, if you see in the trial balance, you get to know 11,000 salary is there. The junior accountant has taken that much salary. This salary is of what? This salary is of 11 months. Yeah, here we have got an adjustment. Okay, so 11 month salary. This is 11 month salary. So what we are going to do is understand, we are going to take that 11 month salary and we have to divide by 11. So that is equal to 1,000. What is this? This is per month salary, isn't it? Per month salary we have got. Yeah, per month salary we have got. Now we can easily know what is the March salary. March salary is also how much? 1,000 only, right? And this is what? Outstanding salary. What happens of this? Really simple. We increase the expense, yeah, and in balance sheet we recognize a liability, isn't it? That's what we do, no? Yeah, if we talk about outstanding expense, we increase the expense and in balance sheet we recognize a liability. Yeah, and then we saw about commission received in advance. Whenever we received in advance, we subtract the income, we reduce the income, and in balance sheet we recognize a liability. Yeah, that's what I said. Reduce the income and recognize a liability in balance sheet. Now, is everything over? Is everything over? Yes, we have done all the adjustment. Everything we have analyzed. But understand there is one more adjustment. What is that one more adjustment? See here. Here they are saying loan to Param at 10% per annum. Rate of interest is given, date is given. Whenever like this is given, you have to understand there is something fishy. Yeah, like here for furniture they had said purchase and everything. Yeah, so we understood here also, but for furniture they said something here, right? In adjustment here nothing has been said. Still you have to calculate something over here on your own. Understand it, it's really simple. Rate of interest is given, the date of loan is given. Okay, we have given the loan of 5,000. So understand, we will be earning interest from Param. So how much interest are we supposed to receive from Param in this year? 5,000 loan we gave to him, right? On this we have to earn how much interest? 10% interest, right? So that's 500 money we have to receive from Param. But what has happened? See, junior accountant has recorded an income, right? Interest income from Param. How much? 300 we have received, and 300 junior accountant has recorded. But senior accountant, we are senior accountant, we got to know 500 is the interest income. Yeah, we have not received 200. Yeah, that's why only 300 has been recorded by junior accountant, because 300 we received, he recorded, junior accountant. 200 we have not received, so it is not recorded. So what we have to do? We have to record. Is that clear? Is that clear? So this is a situation called as what? This is a situation called as accrued interest. We have earned the interest, but we have not received. This is what? This is hidden adjustment. Hidden accrued interest. How much? It is 200. How did I get to know it's 200? Really simple. 5,000 into 10% I calculated. It came out to be 500. But understand how much is there in trial balance. In trial balance 300 is already there, recorded. What is not recorded? 200 is not recorded. Do you understand? Yeah, 200 is not recorded. So accrued interest we have got. So what we have to do when we have accrued interest? We have to increase the income. Accrued interest is income, no? This is income, no? Interest income. So we have to record that income. Yeah, increase the income. And then in balance sheet we have to recognize an asset, right? That we are going to receive the interest in next accounting period. Is it clear? Fine. Did you understand everything, the whole analysis? Yeah, really simple and straightforward. Now let's just see the trading account and let's begin the solution. Now see here we have the trading account. Let's start. First we will take the opening stock which is there in the question. How much? 15,000. Then purchases 1,09,000, wages 8,000. Yeah, all these let's just take at once. Opening stock, purchases, wages. There is no purchase return, sales return, nothing, right? So purchase is done, wages done, opening stock done. Then sales 1,80,000, that also will take over here. Really simple. Yeah, basic things. Power and electricity 12,000. Let's take it easy. Then what? Is there anything else regarding trading account? Nothing, right? So just take the closing stock 30,000, the lower of cost and net realizable value, which will come on the credit side of trading account by closing stock 30,000, right? Now let's just balance out the trading account. 1,80,000 plus 30, that's 2,10,000. 2,10,000 on this side, and then if you subtract all this, you get 66,000 as the gross profit. This gross profit will flow over here by gross profit 66,000. You all know that, right? Then what will happen? Then what we are going to do? Then really simple. Understand. Let's just see what do we have next. We have salaries. Yes. How much? 11,000. Let's just take that in the inner column, 11,000. And then we saw the adjustment that there was outstanding salaries for the month of March. Yeah, there is a star, no? There is an adjustment on that. How much? 1,000 salary was outstanding. So we have to add to expense. Yeah, we have to increase the expense, and that will happen in P&L only. Add outstanding salaries 1,000. Clear? So it's 12,000. Fine. Simple. Next, what do we have? We are done with salaries. Then we have bad debts. Yeah, so whenever bad debts you get, we do everything all together. Yeah, that's what we do always. Yeah, bad debt, provision, all this we do together. So now here we have already done the calculation and everything. So let's just take the bad debts. How we are going to take? We are going to take the bad debts, this old provision also, yeah, all this together. So how that will happen? Let's just see. We already know the provision shortcut will be copied down over here, yeah. New PDD plus bad debts plus further bad debts minus old provision. Yes, this shortcut, and we got to know 1375 we have to debit in PNL to PDD. Yes, 1375. So take it. Is it clear? 1375. Do you understand this? The same thing. All right. Okay. Then what? Yeah, we are done with bad debt. We are done with provision for doubtful debts. We are done with further bad debts. Yeah, we consider no further bad debts came over here, isn't it? And then yes, new PDD also we have taken in the PNL. So all this has been done. Closing stock also done. Then create a provision of 2% for discount on debtors. That is also related to that only, no, to debtors only. So we do all that together only. So just here only we will create the discount provision also. Like I told you, know, what will happen? This new provision for discount will directly hit profit and loss. It will be created out of profit and loss. So it will come 2 PD. Is it clear? See, 2 PD, 2 provision for discount. How much? 523. Yeah, the same calculation. 523, 28 minus 500 minus 1375. Yeah, same calculation. All right, you understood that. Then what do we have? Then after that we have income tax. No, that's not PNL item. See, for PNL item then we have, see here, interest on loan to Param. Yeah, this is an income. No, this is an income. 300. Just take it in the inner column of PNL. Yes, see here. Where is it? By interest on loan to P. How much? 300. That's what junior accountant recorded in trial balance. But we got to know there is an hidden adjustment. Yeah, all interest has not been taken by junior accountant. All has not been recorded. 200 is accrued interest. Yeah, interest that we are supposed to receive, but we have not received it for some reason. We will receive it in next accounting period. So we will add over here, add accrued interest 200, that is 500. Yeah, I told you, know, increase the income. So that's how we are increasing the income. Okay, fine. So we are done with that hidden adjustment. Yeah, in the PNL. So let's just stick interest on loan over. On this there was adjustment. Yeah, so it's done. Yes. Then what? Next, what do we have? Next we have commission received. How much? 4,500. Okay, it's an income. Take it in the inner column of PNL. Right? By commission received 4,500. Right? And then we got to know that in the adjustment that 3,000 is received in advance. What we have to do? Reduce the income. Yes, we have not earned that income. We have not provided the service. How can it be our income? It can't be our income, that 3,000. We have to reduce. Yeah, less advance commission 3,000. Is it clear? So 1,500 is our income by commission. Is it clear? Simple. Understood. Okay, then what? Then see, rent we have. Rent how much? 4,000. Directly take it. There is no adjustment, nothing. Okay. To rent 4,000. Okay, rent outstanding will not come in PNL. Yeah, it is a trial balance item. It will go in balance sheet as a liability. Right? It's a liability, no, that's why. It's not an adjustment. Okay, then after that we have furniture. Why furniture? I'm talking about it in PNL. On furniture we have an adjustment. Think, we have calculated the depreciation. How much? 450 in total. So this 450 you have to take, no, depreciation. Yes, so 2 depreciation on furniture 450. Is it clear? Simple. So let's just tick on furniture. Now here there is an adjustment, so double tick is required. Okay, yes, double tick is required on that. All right, so see here, depreciate furniture. Regarding PNL we have made a tick over there. And then what else? After that we have, no, nothing. All PNL items are finished, right? All PNL items are finished. Now let's just balance the PNL, right? It's really simple. So 66,000 plus 500 plus 1,500, that is equal to 68,000. Can you see? 68,000 on both the sides. 68,000 minus 1375 minus 523 minus 4,000 minus 450, that is equal to 49,652. Now this can slightly vary because of the rounding off. Okay, 1 rupee difference can come. It doesn't matter. I mean, your profit can be 49,652 or it can also be 653 also, right? Because of 1 rupee rounding off over here. Fine. Okay, Understood? Now let's just see the balance sheet, right? Let's go to balance sheet. Now see, here we have the balance sheet. How we are going to do this? It's really simple. Just have a look first in your trading and P&L and take all the adjustments first. Rest of the things are just copy paste. Okay? Yes. So first we have got closing stock 30,000. Take it. It's a current asset. Here we are following in order of liquidity. Current liabilities, non-current liabilities, then capital. Current assets, then non-current assets. Okay? So let's take the closing stock 30,000. Really simple. Closing stock 30,000. Double tick the closing stock adjustment, right? So you are completely done with the first adjustment. Okay, then check in the P&L. Yeah, come from top to bottom, right? Top to down. So then you have outstanding salaries 1,000. Where it will go? You all know it's a liability. It will go in liability. Outstanding salaries 1,000. Clear? Tick the adjustment. Double tick the adjustment. Where is it? Salaries. First we had taken it in the P&L. First tick. Second tick is the balance sheet right now. Okay, we forgot to make the first tick. Okay, we forgot to make the ticks on everything. Yeah, we are done with commission receive everything, right? In P&L when we did that. Now just double ticks are required. Okay, after that, after outstanding salaries, what do we have? After outstanding salaries, see, we have the provision, isn't it? The provision. So what will happen regarding provision in the balance sheet? You all know everything affects the debtors account only. Just simply go to the debtors account. See, I mean the debtors balance 28,000 you have to take from the cushion, right? And then the same thing will happen. First further bad debt will be subtracted, then new PDD, then new PD. Yeah, that's what no, we have done already the same calculation. This thing, copy paste. Okay, the same thing you have to do over here. See, 25,602. Is it clear? Okay, done. Debtors also done. Double tick the adjustment. Yeah, the second adjustment, further bad debts and new provision, and new provision of discount also. So then what do we have after this? We are done with the provisions. Then we have, see, furniture. Yeah, depreciation on furniture. How much? 450. So let's just take the furniture. In the question, how much was the furniture? The furniture was 5,000. Let's just take that 5,000 in the inner column. See here, furniture 5,000 in the inner column. Then we are going to subtract the depreciation 450. So that's equal to 4,550. Is it clear? Simple. After this, what do we have? Let's just double tick first. Furniture also double tick. Only commission received is left. Okay. See here. Then we had hidden adjustment. No. Yeah. So let's just do the hidden adjustment thing also. Accrued interest we have of how much? 200. What is accrued interest? What happens? Accrued interest means you have to recognize it as an asset, no, in the balance sheet. Yeah, accrued income you increase, that's fine. In the balance sheet also you have to recognize it as an asset, that 200. So how it will happen? Whenever interest is there and you have an adjustment like this, outstanding interest or accrued interest, and then related asset or liability is there, then you have to connect those things, right? Here related asset is there, no? What is that related asset to this interest? Loan to Param. You have given loan to Param, that's why this is happening, no? Yeah, that's why you have earned the interest and accrued interest happened. So you have to connect over here. You have to take this 5,000 and plus accrued interest you have to show. Okay, so how that will be done? See here. Loan to Param at 10% per annum, 5,000 in the inner column, then you will add the accrued interest 200. Is this clear? Simple and straightforward, right? 5,200. In the previous problem also we saw, na, isn't it? There was a loan and then outstanding interest. We had to add in the liability side, like that only, right? Here it's an asset. We have given the loan, we have earned the interest, so we are joining it. Fine. Okay, simple. Then what? Then what is the next adjustment? Do we have any more adjustments? Yes, commission. No, commission is there. So advance commission. Commission received in advance is a liability. You all know. How much? 3,000. Just take it. Commission received in advance is a liability, 3,000. Current liability. Right? Now all adjustments are over. Yeah, double tick everything. Yes, commission received also double tick. And then hidden adjustment also double tick you can do here. Yes, isn't it? You have taken it in P&L, accrued interest, and then in balance sheet also you have taken, right? Accrued interest. Okay, fine. Then after this, see what is left. Check for the balance sheet normal items, isn't it? So let's start from the beginning. We have income tax. Let's take income tax. But if you're taking income tax, you have to take capital also. So let's just take capital, 1 lakh. That's the opening balance, 1 lakh. add the net profit. Net profit was how much? 49,652, and then less income tax. Income tax is like drawings, you have to subtract. So that is equal to total closing capital 1,44,152. Is it clear? Simple. Capital done, right? Yes. And then what do you have after that? Cash in hand. Cash in hand is balance sheet. Let's take current asset. Cash in hand 20,000. Easy. Yes. Then see, we have rent outstanding. It's a liability. Yes, it will come over here. Rent outstanding 600. Okay. Then we have bills receivable. It's an asset, current asset 6,000. Then we have, see, bills payable. How much? 1,600. Bills payable 1,600. Then what do we have? Then we have machinery. Machinery, I told you, we have assumed it has been purchased at the end of the accounting period. So no depreciation has been charged because no time has been passed. So 72,000 entirely we can take in the fixed asset. Machinery 72,000. Clear. Easy. Next, what do we have? We have debtors. Debtors we have done. No, why have not we ticked this? 1, 2, 3. Yes, 3 adjustments were there regarding that. So 3 ticks like that. 28,000 we have done regarding that, isn't it? Yes. Then creditors. Creditors 13,000. Easy. No adjustment, nothing. Just copy paste. Creditors 13,000. Is it clear? Really simple and straightforward, right? Now you can confirm everything. All has been ticked. Yes, everything has been taken. All adjustments double ticked. I told you now, every adjustment will go 2 places. So double ticks on that. Is that clear? And then here in debtors, we have made triple ticks because 3 effects have come on debtors. Yeah, in this 28,000, 3 effects have come. Further bad debts, new provision for doubtful debts, and new provision for discount. That's why 3 ticks. Is that clear? Debtors have come on only one place, okay? 28,000 only, but 3 effects are there. So you have to confirm whether you have taken all the 3 effects. Is it clear? Right. Simple and straightforward. Yeah, hidden adjustment also you have done. So all has been done. Then at the below we have written some notes over here. The full form of PDD and PD. The first note is about the furniture. That in furniture there is a piece of furniture which is 1,000 which has been purchased in current year. So we have to properly calculate the depreciation from the date of purchase till the year end, right? And for the remaining full year depreciation. Is that clear? That's what the first note means. And in the fifth we are talking about the hidden adjustment, that whenever you have got a loan or something like that where interest rate is given and then date of loan is given, then you always have to recalculate the interest for the current year and check with the trial balance whether it matches up or not. If it matches up, then no problem, no adjustment. If it doesn't match up, that means there might be outstanding interest or accrued interest. Yeah, here it was interest income, so it was accrued interest. If it was, let's just say, loan we have taken from the bank, right, and such a situation arises, then it would have been outstanding interest. Is that clear? Like in the previous problem, but it was not hidden. In the previous problem, they specifically told us in the adjustment. Here they didn't tell us anything. We had to recalculate and compare and understand that here we have got hidden adjustment for accrued interest. Is that clear? Yes, and we saw the treatment and everything. So that's all for this video. I hope you have understood. If you have any doubts, comment down below, or you can always message me on Instagram. Yes, and the notes will be available on Telegram channel Saheb Academy 7. Okay, so see you in the next video. Bye.